Morning, everybody. Garrett Baldwin. It is March 10th. I hope you're doing well. We're here in good old Maryland, and we figured, hey, why not just get up in the morning and just start shooting, see what happens? That's exactly what we're going to do. We'll be releasing this to me and the Money Printer on Substack, throwing this up on YouTube, and see what happens, because why not? Anybody who doesn't know this place does not know Cactus. Cactus was one of the great trading bars in Chicago. Don't drink and trade was the slogan. It said on the wall, one of the great haunts in the shadow of the CME and CBOE. We did a lot of tributing to Series over the last year and a half, and I got to give it up to Brooke and the rest of the team at Cactus from back in the day, one of my favorite places. And we're just going to start shooting. Don't cost nothing. We're just going to call this the Morning BRRR. Hey, I see what you did there. Hope everybody's doing well. We're going to talk about Iran, talk about oil, what's going on there with Trump, and volume weighted average price. One of the key things I want you to be focusing on for reversals in this environment. This is a huge kind of change, obviously, with what the Trump administration did yesterday. We're going to call this the OPPO-Taco trade, as it is Tuesday. We'll dig into all of that. Your key rundown today: biggest insider buy to sell ratio, not in terms of dollar amounts, but in terms of Form 4 documents all year. Big signal. This is also trying to help contribute to the squeeze that I think is kind of coming right now. We'll walk through what happened with our momentum indicator, why it matters, and how we're moving back to equilibrium, and how that can continue to pull the market higher. Trump going OPPO-Taco. If nobody knows what OPPO-Taco is, you didn't watch baseball last night and watch Aaron Judge hit a rocket to right field. Oil crashing down to the $91 level. We're going to talk about what that means. We're going to do a real quick series on VWAP so that you can see how to trade this, how to invest, how to focus and look for reversals around news. And then we'll talk about our one breakout stock, our one breakdown stock from our current indicator list, and a little bit more. So let's dig in, everybody. The key things today on the economic calendar, what you need to be paying attention to: small business optimism. We just saw a relatively weak jobs report come out last week. How is sentiment here in the U.S.? Yes, we've got a lot of focus on what's going on with oil prices. The EIA short-term energy outlook comes out today. And keep in mind, that's not going to have a ton of information dating back to, well, what's happened over the last 8 days. And that's critical. We have the G7 Energies Ministers meeting happening today as well. That's going to be critical. Chatter about what may happen in terms of a release in strategic oil reserves. As you know, I went through this on Sunday night. If you are a member of the we renamed it, didn't we? We changed it from the Capital Wave Report to Money Printer Pro. So if you are a Money Printer Pro member, you know exactly what we were talking about with oil prices. And we got that CPI update coming. We want to watch for that BLS schedule. On the earnings side, Oracle. Again, this is the AI story still playing out over time, and we have to be very, very just honest with ourselves about how that is playing out. Cloud continuing to be the primary driver. We're watching CPE today as well, and Vertex Pharma. I'm not going to take up too much of your time today, but I want you to really just note this is the bigger story for anything for me, and that is that we just saw the largest insider spike all year, not in dollar amount, but in terms of buying to selling ratios. And this is statistically significant. It is important to see that executives are putting their money down while all of this turmoil is transpiring. Now, this is, I'm going to hypothesize, more of a squeeze move right now, and I think that that's important. But I will just note, this is a significant event. This is a significant uptick in purchasing. And every day we go through this at the Insider Buying Report. We also have insiderstockbuys.com that we'll be launching relatively soon. And the final thing is we put this in the morning letter as well for Money Printer Pro members. So just pay attention to what the top filings are, and we set up trades built around those names, and we talk about the opportunities of whether or not these are good long-term investments as well. Keep in mind, if CEOs and CFOs aren't buying their stocks in this environment, why are you? That's a really important question to ask. All right, this is the big story, right? Trump going OPPO-Taco. For anyone who is a baseball fan, you know what OPPO-Taco means. It means to put the ball into play over the right field wall. If you're a right field hitter, you're going opposite direction. And the taco trade has been the story, right? The idea that Trump always chickens out. Here's the thing. Yesterday, we saw a relatively significant shift in the market because Trump goes on air and effectively says to CBS, we think that the war's we won, right? And this is what has been said. We wiped out every single force they have. We sunk most of their Navy, called it a little excursion, said it's very complete pretty much, saying missiles down to 10%, maybe less, and saying that, they're talking about waiving oil sanctions and, the opportunity of Navy escorts. Okay, so that's what he said. The markets liked the news. We obviously saw a significant move in the S&P 500, across the NASDAQ, across everything else yesterday as we wrapped up our day. Now, what's actually happening? We have a new Supreme Leader, Khamenei. We haven't seen him. We don't know where he is. He's younger, more hardline, deeper ties to the Revolutionary Guard. The Iranian foreign minister saying that negotiations are no longer on the agenda. The Revolutionary Guard saying that the Hormuz is open only to states expelling U.S. and Israeli envoys. Okay. You also have advisors urging Trump to find an exit ramp, and the Pentagon has reported American casualties. Here's the important thing about this, and I want everybody to really understand what I think is brewing in the background. All right. One of the key things that I said on Sunday night, and I've written about it, is that we had to watch the bond market. And the bond market wasn't exactly crazy about the news that was transpiring. We saw a significant spike in oil prices. We saw deeper concerns around ongoing debt. And the thing that matters in this situation, and I think that this is an underlying trend, two parts. One, this proves once again that all of my academic background kind of goes out the window when it comes to President Trump, right? The market follows insiders, the market follows momentum, but it really follows Donald Trump. And that is pretty significant. It's pretty significant. So we have to keep in mind that even though this market has a set of rules, we are always one Trump tweet away. We are always one headline away from a complete and total shift in expectations. So right now, as we assess this and we look at this, what we're seeing is a market that reacted to Trump in a very unique way. And the question is why? And to me, I surmise the idea here is that Trump administration, Scott Bessent and the rest of his team, they are very sensitive to the way that markets perceive them. We saw back in April of 2025 the way that the market sold off, and then they kind of just called it out. And that's kind of called it off. And that's where the taco trade, the Trump always chickens out concept comes from. It's the idea that they are going to, appease the market. And last year, when we had that big sell-off and we saw the big drop that happened from the squeeze in up until March 28th into that sell-off into the 7th, 8th, and 9th of April, what transpired from there was kind of a shift in policy. And that shift in policy was accommodative to the market. This morning and yesterday, it kind of has that feel to it. The idea that they are willing to see how far things can break and then see how the market reacts. And we saw what happened on Thursday and Friday, and they effectively told the market what the market wanted to hear. Now, I'm not going to say that that's going to completely and totally dictate policy, but it kind of has to, because in the event that this market does break, in the event that bondholders walk away, in the event that yields start to rise, that creates pressure in other places. And one of the primary places that it creates pressure is areas like private credit. In a world where we are continually refinancing lots and lots of debt, if we start to see significant selling in U.S. debt, particularly from leveraged funds, that creates a significant amount of pressure on Scott Bessent and the rest of his team. So this is important to keep in mind. I always recognize that we're always a headline away. Now, this does not solve the oil issue. And I want to stress this today. We saw a significant spike in oil prices yesterday to start the day, and then obviously that pullback. That pullback is really a question of where did that buying pressure really originate? The price pressure really started to originate on the significant amount of buying that was coming out of Asia. As I noted on Sunday night, that was going to be the competition. It was going to be Asian buyers who were frantically trying to purchase in order to effectively refill existing tankers in order to ensure that they had energy security moving forward. So they were pulling heavy on the front end contract in the oil markets. The big question now moving forward for markets is what is it going to look like on that September, October contract for Brent crude prices? Because if those prices really start to accelerate, if they start to move, that suggests that the market anticipates longer problems in terms of feeding oil into the markets. One day is not going to make the oil markets right now. And I want to stress something. Trump administration saying they expect oil prices to come down. We already heard that out of this energy secretary about a week ago. The core thing here is right now, we're still in line with where Goldman Sachs had effectively said this is where we anticipate oil prices to be if it is a 2 to 4 week war. That said, this has permanently, for a while, raised the support level for oil prices. Even the most bearish people who may have been at around $40 to $45 for oil prices heading into later this year are now starting to raise their floor on oil prices for the duration of the year. And the reason for that is a couple of different moving parts. The primary thing has to do with what is transpiring in the Strait. And the Strait of Hormuz is where 20% of all oil flows through every single day. So every 5 days that we have a shutdown, we lose one full day of global supply, which creates all types of havoc across refining, all types of problems across the entire broader system, particularly with distillates, jet fuel, every other type of byproduct. Remember, India doesn't have that large of a supply in order for emergency situations. We're starting to see when it comes to natural gas, the pressure that is on Europe. The thing that's going to continue to happen here is, look, it takes years to build up trust in one particular area of the world in terms of how we move things through supply chains. The key thing, unfortunately, is this is going to undo a lot of trust in that area. As long as Iran is there, as long as that threat is there, you're going to see insurance prices for tankers permanently increased. It's still going to take time to bring things back online if other nations are reducing their output due to security concerns. The Iranians have already warned once again that, look, again, ceasefire talks are off the table. That's important. They've also said that all of these different tankers need to proceed with caution. And the reality is that some of these tankers are getting through at the moment, and that's great, but that's not the way that this works. It's going to take years to get back into the rhythm of trust that something positive is going to happen through that area. So either the Iranians have to lose control of the situation, or we're going to have permanent Navy escorts for oil tankers through that strait. That's just not going to work for the global oil supply chains. Now, you can move pipelines. You can try to create a new Arabian Canal that would go through the UAE. That's going to take years and years and years to even get to believe that we can get to that point. So right now, this still is a major issue. Obviously, the security issues have not gone away. We have to be very, very diligent about this. And I continue to remind you that it is a difficult game to try to play the speculator when it comes to oil prices. So I continue to argue there's always money in the midstream. There's always money in the pipeline companies. There's always money in the companies that are actually physically moving this stuff. Names like Energy Transfer, Enterprise Product Partners, ClearBridge Infrastructure Fund. These are very good companies that are simply collecting fees for moving things from one place to the next. And that's kind of the way that I like to invest. So the idea here is that is the choke point. The choke point becomes the pipeline names. It becomes the shipping companies. That's where there's cash flow. That's where there's inflation protection. And you leave this, all what all this is, to the speculators. All right, so this is the big story from yesterday that I think a lot of people missed. I want to talk real briefly about volume weighted average price. This goes back to my friend Kenny Glick. We've obviously gone through this entire process over and over again, explaining what volume weighted average price is and why it matters. But I do just want to point out yesterday was a fantastic day for people who recognize the value of following a strategy like this and looking for reversions. Volume weighted average price is where the majority of money actually changes hands. I'm going to move over to TradingView real quick, and I want to show you the SPX. The SPX is the S&P 500, and what we're doing here is we're just bringing this down to a day. What you see in front of you is this blue line. That is the volume weighted average price. This first band is the first standard deviation of price. That represents about 65% of expected moves. In between here, that's 97 in the second standard deviation and 99.7 in the third standard deviation. What you're looking for on most days when you are trading or investing or looking for opportunities to enter positions, I continue to just advocate and argue, you look for moves down here in the fourth standard deviation. This is where Stanley Druckenmiller back in 2018 told Real Vision that trend is under pressure. Typically, we look for markets to sell off, and typically, if it gets down into this area, it is statistically considered a place that is dangerous for anyone who is trying to short. What we're looking for here is the idea that if you are looking into the downturn, this is where algos start to bid up and squeeze back into later in the day. So if you get down into this fourth standard deviation, remember only 0.3% of price is expected out there. That's where we're seeing bidding and moves back toward VWAP. Now this is important, right? Because what can transpire if you get that type of squeeze is a significant move that can be $3, $4 on the SPY, on the NASDAQ, on a number of those other large companies like NVIDIA, Apple, Amazon, down the line. If you're looking to go long on positions, if you're looking to buy stocks, these is going to be one of the optimal places to do it if you are trying to squeeze a little bit more value out of your trade, but and your investment. But the other thing about this is so critical is yesterday we saw the SPX pop above that volume weighted average price line, and that's where institutions tend to accumulate during the day. This is considered the fair price of the day. And I want to just point out what happened here at this line at 10:30. We popped above that specific level. You see that at 66.60, and we finished the day up near 6,800. This is significant if you flip over and look at the SPY. The S&P 500 ETF, the SPY, is replicating the S&P 500. 664 on the SPY took us up to 667 at the end of the day. And why does that matter? Because at around 10:30, this call option for the 664 was about $2.30. At the end of the day, it finished, I believe, somewhere around $13. Okay? And that actually is statistically correct, right? 667 minus 664 is 13. So you have a move here, right, of $2.30 up to 13. That's a huge move. That's a monstrous day. That's a 500% or more return. And all you're doing is buying the call at that level, and you're holding it through the day, and you're watching it, you're managing it. And here's the funny thing. If it falls back under that line, you let it go. But as you could see, a lot more volatility. And that's the nice thing about that. When there is a lot of volatility in the market, it becomes your friend with volume weighted average price, because the moves can be bigger. The reversions can be bigger. The retractions, right? You're not trying to short up here. You're simply looking at all times for these moves, for these rebounds. And that is your simple lesson of the day on VWAP. Our momentum indicator is minus 33 today, and that is important. This morning, we saw a nice move down to 0.46 on our market, on our cap side. So just to walk you through here, we're taking the number of stocks breaking out versus the number of stocks breaking down. The way that we statistically measure it, we call these screamers just versus breakouts. And At the moment, we are still highly negative on the S&P 500. But that said, the cap, which is the weighted amount, right, based on how much dollar for dollar in terms of the cap of the individual companies that are part of the S&P 500, that is actually pulling us up. It's pulling us in a positive direction. And what we ultimately want to see out of this cap before we really take action and we really feel conviction is to see this at least in the positive territory. We are still under a lot of pressure. There still are plenty of other things to be concerned about at the moment, right? We're down a little bit on the S&P 500. Brent and crude continue to break down a little bit. The key thing right now is we still have all of these other problems in the background. And if we look at the stocks that are breaking down, it's still a lot of the same things that we were talking about before Trump spoke yesterday. A lot of financials, consumer defensives, a lot of exposure to the private credit. That has not gone away. And one of the things that we're looking for on the stocks that are really in breakdown mode, we're looking for insider buying, and we're looking for these stocks to fall off their list. And then we can have some conviction and look for some moves to the upside, particularly things that we want to own for the long term. And that might be things like Blackstone, BlackRock, even some of these consumer defensive names that look cheap, like ConAgra Brands and General Mills. American Express continuing to be under some stress. And I really like American Express, but right now, I'm not willing to touch it while it is on this list. I'll look to accumulate when the time comes. But overall, our indicators suggesting weakness. We want to be very cautious. And once again, go back and look at volume weighted average price for your guide. Now, this was at minus 4.6 when I got up. We've seen obviously some movement pre-market. We were positive on the Qs. It looks like, if anything, the semiconductors will be the thing that pull this market out of its rut if it can. And the Russell remains under a significant amount of pressure. Our breakout name for trading and focus to the upside, that's going to be Live Nation. Live Nation with that catalyst, the settlement with the Department of Justice, settled during the antitrust trial. They are divesting exclusive booking at 13 amphitheaters. Ticketmaster opens to non-exclusive proposals, and fees are going to be capped. Stock just continuing to look what we're looking for in terms of momentum-based names, just that it can actually continue higher highs and higher lows. That's kind of the trend that we're looking for. It's been a very strong stock going back to December. All-time highs are up around 174. And this is a name to just keep a very close eye on. If you're trading it, you want to trade around specific metrics, fine. If you want to invest in this stock for the long term, great. But the key thing here is to just note, this is in a breakout mode. You want to continue to just keep your focus on the continuation of momentum. Higher highs, higher lows is kind of the trend we're looking for here. Strength back here to that 160, 140 level, and a possible move back to that 175 figure that we saw. On MetLife, this is the other thing that I think is still critical. With all of the focus that's going on right now around private credit, I believe it was David Einhorn who noted that a lot of insurance companies still have a lot of exposure to private credit. And a lot of pension funds are going to have exposure to private credit. And a lot of people are going to have exposure to private credit. The key thing to keep in mind, however, is these stocks are still beaten down. And this is really our kind of canary for what is happening in this financial system at the moment. Insurance stocks getting beaten up. This is supposed to be more of a safer environment. This is supposed to be a place for long-term float emphasis, right? The idea that these companies generate premiums and then are able to put that money to work. Well, if they're putting that money to work and they're putting it into private credit, that's not working out right now. And that's kind of the way that a lot of people are trying to emulate the Buffett strategy, right? Of taking in float and trying to find ways to maximize the value of those premiums. It's not working out on the private credit side. So we have to just continue look for lower highs, lower lows on names like this. We'll see if we get a reversal of trend, but we're moving back up. If MetLife can get back up to that 72 level, rolling back over seems to be the next move. All right. So we're going to wrap it up. First show. Can't say it was great. I mean, it was something. I completely forgot that I'm on camera the whole time. So I'm probably looking over there out to see that fox that's running out in there in the woods. Anyway, Me and the Money Printer is free on Substack. Check it out. We talk about liquidity, the Federal Reserve, and what's really driving markets. Money Printer Pro is available. That includes our signals. That includes an additional video that we're going to do this morning for our members talking about volume weighted average price and talking about some of these other bigger issues in the financial system as we break down our signal today. Postcards from the Edge of the World went out on Sunday. We did not have a pure recommendation. I talked about a company that I personally own and do not plan to sell for I don't think ever. Core thing here is an emphasis and focus on some of the events that have transpired at Wells Fargo and what that means for you. Check out insiderstockbuys.com. We put that together recently as an opportunity just to give people more education and insight into who's buying what and why it matters. I'll be back tomorrow to talk more about this. Our focus is going to be really more on the long term in terms of investing. We're going to talk more about liquidity cycles, why that stuff matters, and why you're starting to see more and more recommendations that people start to increase their bond allocation and move to what is known as duration. That is a major, major warning about the state of affairs in the global financial system. I want to thank everybody for taking the time to watch me this morning. We'll catch up on the other side. I will see you on Wednesday. Enjoy your day, everybody.